Hello everyone, welcome you all to the Indian Investor YouTube channel where you learn stock markets in detail. Friends, in today's video, I'm going to do analysis of some stocks which are gems for the future. They can perform very well, they have great future potential, and I believe the stock prices of these companies can very nicely compound your wealth in the coming few years. So which are these companies? Let's look at the details. Let's see the prices where one should enter in these companies, and let's see how good these stocks are and should you invest in them or not. So the first stock that I want to share with you, if you look at the returns of this company, the stock is up around 280% in the last 1 year. It is up around 170% year to date. The stock has given around 60% in 3 months and 62% in the last 1 month. So that's very good returns. And even in the last 1 week, the stock has given around 32% of returns, which is excellent. And continuously the stock has been performing. This company manufactures cars and commercial automotive vehicles. The company designs, manufactures and sells heavy, medium and small CVs, commercial vehicles including trucks, tankers, vans, buses, ambulances and minibuses. It also manufactures small cars and sports utility vehicle SUVs. Now, the company is a leading CV manufacturer in India. This firm acquired Jaguar and Land Rover brands in 2008, and Jaguar and Land Rover brands merged to form one unified company in 2013. And the name of this company is Tata Motors Limited. So why now am I bullish on this stock? Why do I think that now this stock can perform? So let's look at the details of Tata Motors and let's see what is the reason why I think now that the stock is going to turn around and now the stock will start to rally. So this is you can see the pic, that is Nexon EV electric vehicle. So Tata Motors is going into the electric vehicle space very nicely. They have bet big on that, and I believe that will be a big reason for the growth of Tata Motors. I'm positive on Tata Motors considering its resilient operational performance lately, robust FCF for JLR and standalone businesses led by the company's all-round strong performance, falling debt and better earnings visibility. Tata Motors is actively working on switching to a dedicated electric vehicle platform. The car maker believes this will give it a crucial advantage when it comes to space, lowering cost and optimizing systems. Currently, the most committed player in the Indian EV space, Tata Motors has already come out with its first EV targeted at private car buyers. The Tata Nexon EV is the Indian car market's first sub rupees 15 lakh electric car with a practical ARAI certified range of 312 km. As the cost of batteries go below 150 or 140 USD per kilowatt hour, and once electric cars start going mainstream, Tata is likely to move to a dedicated EV platform, and the advantage of this are many. In creating its own dedicated EV platform, Tata is also sure to leverage its newly acquired platform engineering skills. Using lessons learned on the ALFA architecture will be essential in keeping cost down. And then what should drive down further cost is that the Tata Group is also in the process of getting into battery and even cell manufacture with sister company Tata Chemicals. The latter is looking at replacing rare and expensive materials that go into the battery and motor with more affordable locally sourced ones. One thing's for sure, Tata Motors currently is in the lead when it comes to affordable electric vehicles, and it seems to determined to hold on to it. H2 FY21 results saw a strong turnaround in operational performance in all three automotive businesses, JLR, PV and CV, and we can expect the company's operational performance to continue in the medium term with recovery in all verticals of automotive businesses. Outlook for JLR business is positive, aided by macro environment improving in Europe, UK, America and China. Outlook of the domestic CV business is at the cusp of a sharp cyclical rebound with notable demand arising from infrastructure, mining and e-commerce activities. Tata Motors PV business has transformed significantly because of strong sales momentum with the new Forever portfolio, and its management is committed towards reaching zero debt for its automotive business division, and robust result turnaround in key businesses during H2 FY21 has a strong reason to believe that the company is on the right track towards achieving zero debt level. We can expect all-round improvement in the company's business, and hence I am bullish on the stock. believe Tata Motor is taking right steps towards increasing its focus on the EV business in India. The funding from the external investors would help the company to aggressively develop and launch electric vehicle models. And also, Tata Motors is likely to benefit from the re-rating of valuation multiples driven by improved ESG ratings and its focus on the EV technology. We can expect operational performance to improve strongly in H2 FY22 as the supply constraints are expected to gradually ease. We can expect it to benefit from improving macro environment in India and globally post normalization of economy. The company is generating strong free cash flow, which will help it pursue its business plans and reduce high debt. We can expect it to become earnings positive in FY22 earnings and a 64.8% year-on PAT growth in FY23 earnings driven by a 16.7% revenue CAGR during FY21 to 23 earnings and a 120 BPS improvement in EBITDA margin to 13.4% in FY23 earnings from current 12.2% in FY21. Now, the macro environment is improving in Europe, UK, America, and China. The rollout of COVID-19 vaccination programs in many countries is keeping the overall outlook positive over the coming months, following the respective approval of various vaccines. Now, the medium-term outlook of domestic CV business is strong, with notable demand arising from infrastructure, mining, and e-commerce activities. We can expect strong recovery in demand post the normalization of the economy and speedy rollout of vaccination programs in India. The concern of chips shortage remain a lag for global passenger vehicle business, and it is expected to gradually improve from H2 FY22 onwards. And Tata Motors targets double-digit market share in the electric vehicle industry segment and expects 20% of its sales from electric vehicles in the next 5 years. So that's a very positive sign. And the contribution margins of EV is like that of its traditional PV. The management expects its electric vehicle business to be EBITDA break-even by FY23, and the EV company will leverage all existing investment in technology, brand, manufacturing capacity, and sales network of Tata Motors passenger vehicle company. It has 71.4% market in the electrified vehicle in the passenger segment, with EV penetration at 2% of its PV portfolio. The Nexon electric vehicle is a leader in the segment. The company started its EV journey in 2018 with a major focus on government sales and garnered 47% market share in FY 2020. Now, Nexon EV achieved highest quarterly sales of 1,715 units. In FY21, the company started to focus on the PV segment as well, where incentives from the government are not as attractive as for two-wheelers and three-wheelers. Now, the company has been building up an ecosystem for EV infrastructure through support from group companies such as Tata Automotive Company, Tata Power, Tata Chemicals, and Tata Motor Finance. Overall, the stock can be a good bet for long term. If you are looking for a stock to invest for, let's say, next 5 years, I think this stock can be a very good bet. And after a long time when the stock underperformed, finally looks like the stock is trying to change the trend and it's trying to go up. Now, from just 350 levels just few days ago, the stock is now currently trading near 497. So when should you enter in this stock? What is the price which where one can enter in this company? So according to me, the best price would be around 450. That is where the first, if you want to invest, the first price would be that, followed by 120, which is the second price, and of course 350 would be very good price to enter in this company. So these two prices, I don't think there will be big correction till 360, but 450 is possible. So you can enter near 450 rupees and keep a long-term view, have a view of let's say 5 years. I think the stock will give very nice compounded return for your investment. So this is a stock in which you can keep an eye on, and it has great potential for the long term. It can perform very well. Now let's look at another company which is also very interesting, which is also a great stock, fundamentally excellent, where one can invest for long term. Now, if you look at the returns, this stock has given around 500% of returns in the last 10 years. Dividend yield is around 1.1%, and this company is among the pioneers of IT service outsourcing business in India and is the largest IT services firm in terms of export revenue. Incorporated in 1968, the company provides a comprehensive range of IT services to industries such as BFS, insurance, manufacturing, telecommunications, retail, and transportation. The company is well positioned to benefit from growing demand for offshore IT services given its solid execution capabilities, long-standing relationship with clients and stable management team. The company is a serious contender for winning large deals as it has better experience compared to peers in implementing large, complex and mission critical projects. It is one of the preferred IT vendors for most Fortune 500 Global 1000 companies. This firm is one of the leading IT service companies with a wide range of capabilities, robust digital competencies, strong platform, and stable management. Management is very good. The company is the preferred partner of large corporates and is increasing its participation in large digital implementation. Hence, I believe this firm would continue to gain market share in digital versus its large peers given its superior execution capabilities on the digital front. I remain positive on the sustainability of its revenue growth momentum in the medium term given strong deal wins, broad-based service offerings, higher spend on digital technologies and best-in-class execution. I believe this firm is well positioned to capture growth and transformation opportunities given its competencies across technologies and verticals, strong contextual knowledge, excellent product and platform portfolio, and solid execution capabilities. The management remains confident on sustaining margins in FY22 despite supply side challenges led by strong revenue growth, higher hiring of freshers, and availability of a large talent pool. We can expect the company's US dollar revenue and earnings to clock 11% and 14% CAGR over FY22 to 24. Any correction in stock price would provide a very good investment opportunity for long-term investors. So if you're long-term investors, I think this stock is the one where you can look to enter. And the name of this company is TCS, Tata Consultancy Services Limited. Now let's look at the chart. So according to me, the best price to enter this stock would be near 3,500, and that would be great price to enter this stock. If you have a view of 5 years, I think this stock will give very good returns, risk-free returns to your investment. So I shared with you two companies, both are for long term, and if you have a long term view, I believe this stock can perform very well and give you some very good returns. So I hope you liked my analysis. See you again soon with another stock analysis video. Till then, goodbye, take care, happy trading, happy investing.